Thank you, Ed. And I'm sure that all of you are happy that Ed is not as pessimistic as the Los Angeles Times article said he would be, starting with the funeral dirge. But we're turning to California, so before you all go out and slit your wrists, you need to hear what's happening in California. What I want to do is I want to talk about California in the context of our theme here about housing and what's happening in the housing market, how strong is it? And the question that I'm posing is, where have all the construction workers gone? May seem like a strange question, but it's going to give us some insight as to the forecast and what's happening in housing, and some insight into something that I've been talking about since 2006, which is the bifurcated California economy. We have an inland economy that was really hit very, very hard in the Great Recession, and a coastal economy that took a much milder hit and came out of it quite well relative to the rest of the U.S. So the way in which I want to do this is first talk about what's been happening over the last year. That's going to set the stage. And then look at housing, recovery, do we have a bubble going on, and this question about the construction workers, and that'll lead us to the forecast. So let's start out with payroll jobs. You can see here, hopefully, that in the recession we lost 1.3 million jobs in California. These are payroll jobs. And we have now recovered about 736,000. There is data that suggests very strongly that when we get our benchmark revision to these numbers, and they're revised once a year every March, it's about 100,000 higher. So by this measure of employment, we are about 65% of the way back to the jobs we lost in the recession. In terms of total employment, which includes those people who are consultants, independent contractors, the self-employed, we are 95% back here in California. We've regained almost all of the jobs that were lost in the recession. So we're making progress in terms of employment. And if you look at California, so I got a call 2 weeks ago from a reporter from Sarasota, Florida, who said, our governor is going to try and poach jobs from California because you're doing so poorly. And I said, well, the first thing you ought to do is go ask your governor, why is Florida not growing as fast as California? What you see here are growth rates of employment by state over the last 12 months. Number one is small Utah, who has a very significant booming tech sector. Number two is California. California is the second fastest growing state in the U.S. If you look at the 2011, which is the latest data we have for GDP, California is one of the small group of states that's been growing much faster than the U.S. So California, in spite of all of the rhetoric and all of the rock throwing, which seems to be a blood sport in the U.S. at California, is actually doing quite well relative to the U.S. We're growing much faster. And you can't see this, so I'm going to describe it to you. This is by sector. The growth is widespread. The first and sort of the fastest growing sector of the last 12 months is leisure and hospitality. But that's not just substituting restaurant jobs for factory jobs. Rather, that is a recovery of the jobs that were lost in the recession. So we're about 2% higher than in 2007 in leisure and hospitality. And it's because people are eating out more now and because tourism is up. The dollar is down and international tourism is up. Next is professional, technical, and scientific services. And then we have something that might be a surprise to you. Number three is construction. We're hiring again in the construction trades. And then we have administrative services, which is where the temps, but also the consultants hang out, healthcare. So kind of all across the board. The only place we're losing jobs in California is government, state, local, and federal, and in manufacturing. But the rate at which we're losing jobs in those sectors, those kind of perennially weak sectors, that's declining to where it's not really significant anymore. So turning to housing, this is California home sales. And And this is not seasonally adjusted, so you see the seasonal pattern. The sales are very seasonal, but if you kind of draw a line through the bottom or any kind of point there, we've had a couple of years of increased sales of homes in California. So that's sort of a solid trend. It's not a sharp trend, but a solid trend. And what's really important and sort of significant this time is what's happening with distressed housing. Because you can have a lot of sales, but if they're all distressed houses, you still have a very sick housing market. And I've been talking for some time about the fact that even though foreclosures have been falling, distressed sales have not, because banks have been moving to using short sales as an alternative to going through the foreclosure process. Well, now in California, both short sales and foreclosures have dropped. Foreclosures are now about 13%. That's the latest data that we have. And short plus foreclosures is about 30%, and that's all over California. So that's the less healthy markets plus the healthier markets. And that means that in many markets in California, we're getting back to the point where we have normal kinds of housing markets. And that's led to an increase in construction. The red line on this graph is multifamily permits. The blue line is single-family permits. Multifamily turned first and is now back to about 75% of its peak. And single-family now has a fairly solid trend. So we're starting to build again here in California and get more housing units. So this market seems to have turned around in many places, not everywhere, but in many, many parts of California, enough kind of to make a real difference in the aggregate. Every time you see a story on the news about the change in the housing market, the turnaround in the housing market in the U.S., they send a reporter to California. And that reporter will find someone who's been looking for a house, and they've made 20 offers on 20 houses, and they've lost every time because the market's so hot, and they're now bid out of the market, and so on. And what that's suggestive of is that we have a housing bubble here. So that's the question, and how sustainable is this turn in the market, or is speculation again run rampant? The answer to the question, I think, can be seen, first of all, in this. This is California. The blue line is the FHFA Home Price Index for California. And you can see the bubble and the crash. So the red line is the average real appreciation from 1976 to 2002. Now, of course, homes are assets. They have to earn a rate of return for people to buy them. This is the average rate of return they've been earning. And if you can see, we're well below that now. So we're just kind of recovering over there on the right. And even if you say, well, we've rebased, so you've got to move that red line down, it still doesn't show anything like a bubble. There's no kind of excessive price appreciation. It's only really a kind of correction to overshooting that happened when the markets were in such bad shape.